Coming up on Market to Market, Canada gets pressure to join the NAFTA 2.0 party. Secretary Perdue brings a bright trade message to the Heartland. Rural America's workhorse turns 100. And market analysis with Shawn Hackett next.
Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.
This is the Friday, August 31 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. Americans remain upbeat about the future even as parts of the economy suffer from lost market share. The Conference Board's Consumer Confidence Index hit an 18-year high last month. That increase was reflected in a 0.4% bump in consumer spending, all fueled by more jobs, wage growth, and tax cuts. Second quarter GDP trumpeted the news by posting a 4-year high. The international trade battle continues to boil. President Trump has threatened to impose an additional $200 billion in tariffs to keep the pressure on China. The world also watched 3 North American countries trade barbs over imports, exports, and the cost of production. Talks between the U.S. and Canada ended Friday with no deal and a promise to resume talks Wednesday. Paul Yeager has what's at stake in the negotiations.
Historic announcement. We are replacing NAFTA with a beautiful brand new U.S.-Mexico trade deal.
President Trump sealed Part 1 of a new deal to replace the North American Free Trade Agreement. Monday's breakthrough saw the U.S. and Mexico agree to changes in automobile manufacturing and a shrinking of the wage gap. But the accord faces an urgent timeline to include NAFTA's third partner, Canada. Canada's top trade negotiator said Thursday she's encouraged by the urgent nature of the discussions to replace the 24-year-old pact. The country's prime minister continues to hold off strong jabs from the White House and his own citizens. The U.S. takes 75% of Canada's exports, which includes things like lumber, agriculture, and automobiles.
Rules of origin in cars is an incredibly complicated issue, but we had reached a high-level agreement with the U.S. in the spring, and we are encouraged by the progress that they made with Mexico this summer.
Congress gave the White House fast-track authority to work out a 3-country deal, not a bilateral agreement. If only the U.S. and Mexico agree, Congress would have to approve any deals reached with the outgoing Mexican leadership. If a pact was reached Friday, the 90-day review clock would have ended before December 1st, allowing outgoing Mexican President Enrique Peña Nieto to sign the deal before leaving office.
Hello, sir.
USDA Chief Sonny Perdue spent several days in Iowa this week fielding questions. Grain and renewable energy producers at a roundtable Thursday in Ames pledged faith in the agency, but admit patience is wearing thin with the pace of negotiations.
While it is very painful in the meantime, we know that a fair and free trade environment is going to be better for the farmers in the long term.
Mexico is the top destination for U.S.-grown corn. Canada did import 1.15 million metric tons from October to June of this year, a major increase over the same period in 2017. But the haul is only 1/10 of what typically goes to Mexico. The Secretary of Agriculture said work on entering into a new pact with TPP countries would help their position with China, a country on the minds of many in attendance. U.S. soybean and pork exports have slowed, which has kept a lid on prices. China imported more than $12 billion worth of soybeans during 2017, almost 60% of all domestic exports. Since the 25% tariffs went into effect in July, U.S. soybean sales to China have slowed.
They sent some lower-level ministers here to begin to restart the conversation at maybe the baseline foundation there and go upward. We think while these two elephants tussle, the grass gets stomped down, but I think theirs is getting stomped more than ours.
The $12 billion FSA package released this week will be based on the current crop year's production. For the initial 50% of crop production, farmers will be eligible for a penny per bushel of corn, $1.65 for soybeans, and 14 cents per bushel on wheat, with a cap of $125,000 on each of the three commodities. For Market to Market, I'm Paul Yeager.
From the time farmers scratched in the dirt, they have searched for an easier way to get the job done. Today, mechanical surrogates supplement the hard work, sweat, and calluses that are the basic building blocks of modern farming. A milestone has been reached in this competition with Mother Nature to feed a hungry world. The tractor itself has become a centenarian, and the birthday party has been going on for almost an entire year. John Torpy has more in our cover story.
Shortly after the turn of the 20th century, the introduction of the tractor to agriculture was a landmark innovation that helped farmers make a giant leap forward in reducing workload. A century has passed since mechanical farming began reshaping the landscape. To mark this anniversary, the nation's attic decided to honor one of the first widely used tractors.
For the American Enterprise exhibition here at the National Museum of American History, we have an entrance icon, which we change every year. And this year we decided to make it the year of the tractor, because the tractor is so important as a business story, not just a farming story, but a business story to the nation.
In the spring of 1918, the John Deere Company, looking to expand into a newly growing tractor market, bought the Waterloo Gasoline and Engine Company in Waterloo, Iowa. The introduction of the Waterloo Boy tractor was seen as the pivotal switch in farming, from animal power to mechanical power.
So there had been tractors earlier, but 1918 is when they really start to take off. By taking off, it changes the way that ag is done. It's an industrial revolution. Instead of having horses and mules to provide power, machines start to provide power. And this is a fundamental change to rural America.
Although the early machines seemed to be more work than farming with a team of horses, every new model plowed the way for farmers to do more with less. Tractors named Avery and Advance were in the field before 1918, but they were large, cumbersome beasts that required a steep learning curve for operation. The advantage of a tractor working all day still set those farmers apart from their colleagues, who remained committed to a culture of working animals.
Those big tractors, in fact, didn't work well for farmers. They were too big, they were too complicated, and frankly, they were too heavy. But the lightweight tractors were simpler to operate, much cheaper to build, and turned out to be a different technological azimuth and really began to be successful.
Well, previously to this tractor coming along, people were farming with horses and mules. And you're severely limited on how much you get done every day because the mules or horses got tired. These tractors came along, they made them fairly cheap to where farmers could afford to buy them. And this tractor probably replaced maybe a team of horses.
The Waterloo Boy tractor was not a powerhouse, having about the same horsepower as today's standard riding lawnmower. It also lacked the comforts seen in later models.
It's clearly not as massive as a modern-day tractor. The cleated steel wheels are different, and the fantastic decals on it, the seat hanging off the back, all these things make it look a lot different than a modern-day tractor.
The N was the first tractor model to carry the John Deere name, and the simplicity of the machine fit the popular tractors selling at the time.
Early on, there were vast numbers of manufacturers. Very little in sales, but in 1916, there were nearly 100 different manufacturers of tractors. By 1918, tractor sales really start to begin to build, and by 1920, the number of manufacturers drops considerably, really just a couple dozen, and sales are up to 250,000 tractors a year.
The celebrations surrounding the 100th anniversary of the tractor stretch from the nation's capital to the nation's Corn Belt, where the Waterloo Boy, and almost every model produced afterwards, was the highlight of Creston, Iowa's 4th of July parade. Organized by a local John Deere implement dealer, JD fans from around the countryside brought their tractors to paint the town green.
We've got 75 tractors, all here to celebrate the 100th anniversary of the John Deere tractors. Oh yeah, you get all them pop-up tractors in the back, and it's got a nice little beat to it.
Even Iowa State Fair got into the act, parking a Waterloo Boy tractor sculpted out of butter next to the event's iconic butter cow. As the year of the tractor comes to a close, farmers are left to reminisce about the importance of what has grown from humble beginnings. From Market to Market, I'm John Torpy.
Next, the Market to Market report.
News of trade talks and the continued prospect of burdensome supplies left the commodity markets mixed just before the start of the Labor Day weekend. For the week, December wheat gained 9 cents while the nearby corn contract rose 2 cents. A lack of movement in Chinese trade negotiations helped cut 12 cents from the November soybean contract. Soybean meal continued its downturn as the December contract fell 9.10 per ton. December cotton continued to rally, rising 59 cents per hundredweight. Over in the dairy parlor, September Class 3 milk futures gained 34 cents. The cattle market ignored the discovery of a single cow with BSE in Florida when the USDA confirmed it was kept out of the food supply. The October cattle contract rose 208, October feeders put on 240, and the tariff news pressed the October lean hog contract $1.35 lower. In the currency markets, the U.S. dollar index was flat. Crude oil bumped up $1.08 per barrel. COMEX gold retreated $6.60 per ounce, and the Goldman Sachs commodity index gained more than 5 points to settle at $468.70. Joining us now to offer insight on these and other trends is one of our regular market analysts, Shawn Hackett. Shawn, welcome back.
Thank you for good being here.
Good to have you back, Shawn. We definitely had a lot of news. There's no shortage of things to talk about here, but I want to start off with a social media question. Sure. A lot of farmers had questions about the assistance package and how that would affect the commodity market. So we're going to take a question here from Tim in Crookston, Minnesota. How will the farm aid announced this week help farmers with their bankers this fall and impact farmers' marketing decisions?
Well, I mean, if you look at the aid package, it was really, really beneficial for the soybean farmer. On 50% of the production, and this year it's going to be very, very big production, they're going to get $1.65 on 50% of their production. So it's a huge amount of money. You know, the farmer can sell today and still get, $9.50 for his soybeans. So it clearly fills the coffers with more money than he was supposed to have. The bankers are going to feel better about it. And there is a prospect they could get a second payment if this trade war continues. So the bankers are going to kind of feel very comfortable that soybeans are the place to be. And even into next year, if this China thing just continues to go on, that there may be more support for soybean farmers. So right now, given the soybean aid and the fact that soybeans is still a much cheaper crop to put in the ground, and we've had some fantastic yields, I'd have to believe that they're going to be pushing more soybeans, assuming the economics stay the way they are today.
Okay. We're going to continue the discussion when we get to the soybean market discussion. Let's talk wheat for a little while here. Wednesday had kind of a reversal close. What's going on in the wheat markets that spurred that?
There's two things going on. We have Northern Hemisphere harvest that's putting pressure, as it normally does this time of the year. At the same time, we keep hearing about downgrades in international crops from the EU to Russia. Now they're talking about Australia crops coming down. And Russia keeps saying, we may not export, we may export, we're not so sure. They keep bouncing around the idea of what's their export capability is going to be. And it's throwing the market into a lot of volatility because it's not sure how it should look like. Because we went through this back in 2010 and 11 when they actually shut exports down and it shot the wheat market up to 8. So overall, there's a big meeting coming up next week on the Russian export. That would be a big driver for next week and direction for the wheat market at this point. But right now, we still feel there's more upside to the wheat market once we get through harvest pressure.
Let's talk about that Russian meeting here for just a moment. Do you think that they're going to cut exports after that meeting?
We don't believe that they're going to cut exports. They did that in 2010, and it actually was a big mistake. It kind of cut their market away. Everyone looked for alternatives. They made a comment back in 2010 that they would not do that again. They would let the market ration their supplies if it happened again. Now, of course, times can change and maybe they've changed their mind. I think they're going to basically say they're going to monitor it, they're going to watch it, but I don't believe they're going to go out and say we're not going to export any wheat. I think they're going to let the market do it this time.
Really quick here, let's talk about exports for wheat. Going into fourth quarter here, what do you expect to see for wheat exports?
Wheat exports are going to be very big. I mean, with all the shortages that we have in international markets and more to come, and we still think the wheat crop can come down further. The Australian crop is, and even now the Argentinian crop is an issue. So we expect that the wheat exports are going to be a very bright spot and going to continue to support the market during harvest pressure, but also lead to a renewed rally, we think, to new highs later on in the season. That's what the pattern has been in the past when we've had droughts internationally like this.
Okay. Shawn, last time we had you on the program, we discussed the possibility of $8 corn. Obviously, that's definitely not the case today. I wanted to give you a chance to defend that position and where you see the corn market headed.
Well, that was a 3-year forecast at that time, and it's still a 3-year forecast. And really nothing has changed outside the short term. You know, the trade wars, the dollar strengthening, all the things that have kind of muddied the waters a little bit, but it doesn't change the trajectory of $8 potential corn. Corn stocks are now down, stocks to usage are now down to the lowest level since 2012. And while they were able to do this without running the corn market higher because we had excess supplies, if we move that number down anymore, the pressure under the corn market is going to start to impact things. And so we stand by that. We still see the numbers looking awfully tight a few years down the road.
Okay. But what about when we look at this year in particular here? We're heading into harvest season. Traditionally, around the first day notice for September, which starts tomorrow, we put in the seasonal lows for harvest for corn and soybeans both, but corn specifically. Do you think that that's going to be the case again this year?
I think there's a good chance that it could be the case. A lot depends on the U.S. dollar. The good news about the U.S. dollar is that this was a monthly close today. We closed below 95.30, which was an important technical level to close below because it keeps the monthly trend down. And so we also looked at seasonals going into midterm elections. And there's a very strong tendency over the last 50 years that the U.S. dollar will weaken going into the 2 months into the midterm elections. So we have this technical bearish close today and seasonals of the midterm elections telling us to expect dollar weakness. If we get that, as we suspect, that should keep the corn market from making new lows and probably putting a low early this time of the year.
What should producers be doing if they're still sitting on old crop corn heading into harvest?
Well, I mean, if they have to sell, they have to sell. I mean, that's a decision that, if they have to do something. But certainly, given our bullish outlook for corn, given our bullish outlook for exports, given the shortages internationally, they would want to make sure they don't sell any more than they have to, and possibly re-own some of that corn with maybe some call options out to March. We would think would be a good idea to make sure they don't get caught in a situation where the corn market runs up to $5 or $6 on South American weather problems and they got caught selling a low again.
All right, Shawn, I want to ask you the same question. Moving back here to the harvest lows in soybeans, it's the same story there. Do you think we will put in harvest lows here within the next couple of days?
Soybeans is a little more complicated because the trade wars have much more impact on it and the crop's much more burdensome. So the soybean market, we're not sure that we're there yet. We think we may need more time, maybe another 30 days to be comfortable that we're putting on the harvest lows. So, of course, the Chinese could say next week that they love Donald Trump and everything's great, but we think there might be a little more work needs to be done on the soybeans at this point.
Yeah, well, let's talk about that a little bit here. We're heading into this next week. President Trump has threatened to put in another $200 billion in tariffs. Do you see this coming to any sort of conclusion between now and November?
We think President Trump is really looks at the polls and looks at how the prospects are for keeping Congress on his side. We looked at the Iowa electronic markets, which are political futures contracts that trade the probabilities. In the last 30 days, we've seen it was Republican keeping Congress was at 65% chance. Now, the Republicans keeping Congress is down to 25% chance, and at 65% is a split Congress. Democrats going to the House, Republicans keeping the Senate. That's not going to work for Donald Trump. He would lead to all kinds of issues with potential impeachment, which I'm sure he doesn't want to go through, and it would really slow down his agenda, which I'm sure he doesn't really want. So I would think that if that continues to be the case 30 days from now, he may be in a position where he's going to want to make a deal with the Chinese.
Okay. The other big news coming out of China is the African swine fever. Let's talk about that here from a soybean perspective. Where do you see this going? Do you think that China will get to a point where they have to cull enough hogs where they won't need any U.S. soybeans?
Well, this is just developing. I mean, we got our first notice from the Chinese at the beginning of August. Now we have 5 cases over a 1,500-mile expanse in the most populated areas of hogs in China. The history's not on our side on this. The history says that once it's that spread and that far out, it's very, very hard to control. There's no vaccine for it. We think that this is something that could proliferate into something more dramatic, and it may force the Chinese to have to take more aggressive action, possibly culling maybe 10 or 15% of the hog herd. If they had to do that, the loss of bean meal demand would be severe. We hope it doesn't come to that. We'll know a lot more over the next 3 months, but right now, it's not encouraging.
Okay. Really quick, your thoughts on the cotton market. 59 cents, I think, from last week's change. Are we going to continue to see some strength, or is that ending here?
This time of the year, we usually rally because hurricanes usually threaten the Gulf, throw potential for heavy rains with open bowls. And so we're seeing some forecasts saying that we might have some threats. So we would think there could be some kind of a weather-related short-term rally in the cotton market, but we really don't think that's going to be anything more than a bounce, and we do expect new lows to be had. We're looking for 75 cents on cotton come October.
Okay, 75 cents. It's something that we'll keep an eye on. I want to talk about live cattle here. Interesting question. Will the African swine fever have any effect on the live cattle markets?
It could have a dramatic effect. The reason is that if the Chinese have to cull so much of their herd and they're run into a pork shortage and prices take off, consumers are going to be looking for alternative meat proteins, poultry and beef as a substitute.
Chinese consumers will be
Chinese
looking?
consumers,
okay.
Yes, and beef. So there's simply not enough beef in the rest of not enough hogs and pork in the rest of the world to handle that kind of a shortage. So we could see just a small portion of the Chinese consumer switching to more poultry and more beef, and we could have a massive demand spike that would just overrun both of those markets right now. So the other thing we're looking at is that Australia is a very, very big supplier of beef to the Chinese. They have a terrible drought. They've been forced to cull. It's been depressing prices and increasing supplies. But we all know droughts come to an end, and this will too. And it looks like some rains might be coming in. If that's the case, we could see the Australian beef supplies completely dry up and their prices take off. And if that happens, it makes U.S. beef far more attractive.
Absolutely. I want to come back to the pork discussion here, but really quick, slide in feeders. October feeders closed above the 60-day moving average. Is that a change in tides?
Closing above?
Yeah.
We're bullish cattle. We're bullish feeders. We have been, and we continue to be. Our smart money indicator, which we look at for capital flows, continues to be bullish, not only the cattle markets, but also the hog market, suggesting that what is going on with the swine fever, what's going on with trade, what's going on with demand is supportive to higher prices. And seasonally, we tend to see the December contracts rise into the fall. So we do think that's maybe an acceleration of the trend that we've been seeing as now that it's moving up an important technical average like that.
Okay, Shawn, I wanted to save some time here for the hog markets because there's a lot going on with African swine fever. Even with the 50 or 60% tariff that China has imposed on U.S. pork, if they have to cull a large production, do you think they're going to source U.S. hogs?
They don't have a choice. I mean, if they want to buy hogs, you run the numbers, they're going to have to buy hogs from everybody they can, and they'll be, look, pork is one of the most important diet items on the table for Chinese consumers. It is almost a religion there. So I think when it comes to that, they will put tariffs aside and they'll buy what they have to buy no matter what they have to pay for it. So we don't think that'll be an impediment to China's buying U.S. pork.
All right, Shawn, really quick here, your 5-second thoughts. How much stability will that add to the market if that is the case?
Well, it caused a huge bull market. I mean, it'll cause a massive bull market in hogs that, it could rival what we saw a few years back when we had the disease problems in the U.S. The numbers are so insane that, we don't want to over-embellish, but the numbers are so insane that one should be very mindful that this could get really out of hand very, very fast.
I'm going to continue this discussion with you on Market Plus, Shawn. Thank you so much.
Thank you.
That wraps up the broadcast portion of Market to Market, but we will keep the conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at iptv.org/MTOM. When our producers travel, we take you along for the trip. Give us a follow at IPTV Market. Join us again next week when we'll explore a lucrative export commodity rooted in the upper Midwest. So until then, thanks for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.